Hey guys, this is Ken McElroy, and you are listening to the Mailbox Money Show with Bronson Hill.
Welcome to the Mailbox Money Show. This is Bronson Hill, and I am super excited today because we've got an amazing guest. We have my good friend Param who's here. She's a physician and runs Generational Wealth MD, and she has made the transition. She has fired herself, just as my book said, fired herself to be full-time, no longer having to chase money, to be able to have your money working for you. And I think most of us would want that. Everybody would want that type of thing in their life. Another thing we have today that I've done it in the past, but very rarely, we have a guest host today. So I've got my good friend, Nate Hambrick, who's the two-time author. He's the best-selling author of the book, The 18 Laws of Leverage, which is an incredible book talking about how do you start scaling wealth, how do you start scaling time, how do you use leverage in your life. So first of all, Nate, welcome to the show. How are you doing, brother?
I'm doing well. Thanks for having me.
I'm excited to have you, man. I mean, just crush your kryptonite using leverage, all these things. We're going to just talk about how we can just extract as much as we possibly can from Param and all the wisdom that she's learned in her time to be able to be not only a medical professional. You know, a lot of people do this time for money trade, right? People are doing time for money trade, and with leverage, it really involves where it doesn't, it's not a time for money trade, right? You're putting value for money, doing other things, and like you talk about in your book. What's one thing you're most excited about for this interview, Nate?
I'm excited to hear an MD talk about the transition from a high value profession to another high value profession. I don't even know if you know this, Bronson, but my father's an ER physician, recently retired, but he'd be the first to tell you that he's had more impact and has generated more revenue and reoccurring revenue through the passive investing in the stocks than he ever did as a doctor. So anyway, I'm very excited to hear your insights here shortly.
Yeah, it's really interesting. They say they did a study, I think in the last 5, 10 years, they found that, 9 out of 10 physicians would tell their kids, do not become a physician, right?
Oh, is
Because
it 9 out of 10? I thought it was 5 out of 10, but
I
good to
think it's nine.
know.
Maybe it's changed. But I believe it's 9 out of 10. And maybe my facts are wrong. But one of the challenges is again, it's still a time for money trade. And I've seen it as well. I worked with two physicians, talked about this in my book, where they were making over $2 million a year each, and they were working 60 to 80 hours a week every week, and it just didn't feel like freedom to me. So a lot of people say financial freedom, but it really involves time freedom. So you've created that for yourself. You're creating that for lots of other people. You have a mentoring program. You've got a conference you're doing. You've got all kinds of things you're doing, Param. So Param, first of all, welcome. Happy to have you on the show. I'm glad we finally made this happen.
Yes, absolutely. Thank you guys for having me on. Bronson, I love your content. I should tell you, and you always get these newsletters, and a lot of them I unsubscribe from, but yours is one I constantly, like even today, I read it. So thank you for having me on here. And again, Nate, I was telling you this offline, but I love the topic of your new book. I'm excited to explore it. I do think leverage should be called the eighth wonder of the world. So thank you guys for having me. I'm super excited to be joining you here today and to dive into my story.
Well, we're excited as well, and let's kind of jump into that. I mean, to be a lot of people aspire. I know a lot of families that I'd love to have a child that becomes a physician, or love to have a child that becomes a lawyer or a CPA or some kind of high profession. Do you think that that's shifting kind of among culture a little bit, or do you think are we just kind of the weird ones that have moved on from that, and you're kind of like in the Matrix showing people that they're not actually living real life?
You know what? That's such an interesting question, and there's so many layers to it. But let me tell you how I look at it, right? And so I'm the first physician in my family. Like, my dad, when I was born, he was like, "Okay, doctor," and he did, and that's what I became. And looking back, I feel like if I were to have, do this all over again, that's what I would do. I love medicine. I don't think I mean, I can't imagine doing anything else. But I mean, my story is similar to most professionals, right? And I think, Bronson, you have a similar story, and Nate, I don't know your story completely, but it's possibly very similar in that you start off doing, I spent decades training to become a physician, and once out of training, I was doing what people traditionally do, where you're just investing in stocks and bonds and making money. And I was in a high income profession. I made a 500,000. I had the doctor home, the doctor car, all of that, right? And I call it cruise control mode because as you're doing it, like you were talking about, right, these stories of all these physicians who are constantly trading time for money. You think you're making your high income and you think you're increasing your net worth, but a lot of us are very unintentional about it, right? So, and we're in cruise control mode. So I was burning out a little bit, right? And so I was relying on a nanny, didn't have as much time to spend with kids. Maternity leave, I don't know if you guys know, but in in California, it's actually very generous. You get 4 weeks as opposed to some other places where it's less than that. And so a lot of trade-offs, but that's what you know, and that's what you keep doing. And cruise control mode works till you hit crisis mode. And for me, that happened in 2019. Until then, I was perfectly fine working 40 hours a week. I had, generous vacation time. But for me, that happened when there was a merger at work and contract got rescinded. And that's when I realized that, okay, well, medicine, my job, I love medicine, but the job can never be my primary source of income because it wasn't going to give me the security I needed, right? And so that was my aha moment when I realized something needed to shift. And I feel like for most people, I see a lot of physicians doing similar things. I was talking to someone who joined our program. We recently started our next cohort, and she said she works 2 jobs as a physician, and then she has a third job where she does some expert witness work. I've heard of physicians who commute 4 hours each day, right? Two hours each way, right? Just to get to a job that they are unhappy in. And so I think medicine and the job that you're in are 2 different things. And most doctors, physicians love medicine. They love helping people. But what we don't realize is that oftentimes we're stuck trading time for money and doing things we don't want to, and we don't really have as much autonomy as we think we would have at that point. And so that's what happens. And to most physicians, as I know, and that's not what people anticipate when you pick the path, right? And what I came to realize at that point was that I really wanted to never have my family go through that, because for me that transition was brutal. So many things happened. My father was diagnosed with colon cancer. He went through chemotherapy. I wanted to spend more time with him. I did get to spend a month with him, but I realized, like, being the only physician in the family, I wanted to be with him during chemotherapy. He was in India. I didn't get to do that as much as I wanted to. This merger happened, and it was a rough 6 months transitioning to the next job and really, getting things settled. My kids had to be in India for a while in that time, and so I was separated from them, a lot of anxiety at that time. And then just when things settled down, and I transitioned into the next job, I thought things were going good. The pandemic hit, and for physicians and for all of us, right? The pandemic was a very different time, and I lost childcare. Kids were home. I was working full time, and I got to work hybrid because I am a radiologist. Most physicians didn't have that option, and then this one day I was like, I try to get things done for the next day ahead of time. I was in my office till midnight reading, and I stood up, and my kids were, sleeping in my office because they wouldn't go to bed without me, and I wanted them next to me. Like, this is just not tenable, right? And so for me, it was like, okay, how do we generate income? And I looked at my passive income at that point, and stocks and bonds was the primary way I was doing things, which is, I think, what most people do, most professionals at least. And I realized that I had about 2,000 a month in terms of passive income once you factor in the 4% safe withdrawal rate that I didn't even know existed. I thought I was making 10% on average in stocks, and that's what I would be able to withdraw. But you have a 4% safe withdrawal rate. That's what you can withdraw if you want it to last decades, which is what it needs to do in retirement, right? And so fortunately, I had a small real estate portfolio at that time, and I looked at it, and I had a third of my money invested in real estate, and I was at that time very passive. I had property managers manage these, out of state long-term rentals, and with a third of my money invested in it compared to the stock market, I was generating 6 times as much in terms of passive income once I factored in the equity I was building up in those properties, right? Initially, I just looked at the cash flow. I was like, how is $500 a month going to replace my clinical income? But that was my aha moment. And
let's slow you down for a minute, Param. You talked about a million nuggets that are awesome. So let's slow you down here, and I want Nate to jump in here too as well. But I think that the first thing you were saying, there's this saying by Mike Tyson that everyone's got a plan until they get punched in the mouth.
oh my
Right?
God,
And so
yeah.
something happens where it's like there's a restructure, there's a time thing, there's a thing. And Nate, I want you to just talk about kind of like how people discover the ability to leverage, right? That there's usually an aha moment or something that happens for people. Can you talk kind of like a little bit kind of behind the scenes what that looks like?
Yeah, I think there's usually pain involved in making that transition, and I'd love to ask you about this here in a minute, Param. But what I've found with so many people, doctors included, is they know they need to make that switch, but you called it cruise control. I call it the golden handcuffs. So
Um,
often, whenever you have a really great profession, you followed the track that I think
yeah,
everyone's parents laid out for them, right?
yeah,
Be a
yeah,
lawyer, be a doctor, right?
yeah,
Life is just good enough that you
Mhm.
don't have enough pain to make that transition that you know you should make. And so I think
yeah,
that's a very dangerous place to be in, because if your life is horrible, if your job is absolutely horrific, you have enough pain to make it better. But when it's just good enough, it's very easy to stay on cruise control forever and you don't make that
yeah,
leap. And so I was actually going to ask you, it sounds like from your story, you had just enough pain with family members going through chemo, with some different things that happened, that you realized, oh, I can't just keep doing the status quo forever. But since you do work with so many other physicians in particular, what do you feel like are the common traits or the common pain points that give them enough frustration and enough pain that they're actually ready to make that leap?
I know. And so this is what I've seen, right? So sometimes it's a family member falling sick, a child, a parent, or a spouse falling sick. Sometimes it's divorce. Sometimes it's, enough pain at work where they lose a job, and or they take a significant pay cut. They're forced to do things they don't want to do. And I think those are the major ones, right? Something happening at work, something happening with your loved ones. There's something in life that is different, and you are unable to continue um, in that cruise control mode, as I like to say, right? And so sometimes a bunch of those things happen at the same time. And I tell people, and this goes back to what you originally asked, Bronson, which is, what makes a doctor pivot? I feel like all of us, like anyone who's earning income, needs to do that. Have your job, but also become an investor where your money's working for you, because that's when. It's this way when when you hit crisis mode, you actually have something else to lean into and not just your job, because that's where, like you said, you're trading your time for money. What happens when you're unable to do that, right? And then that's essentially what the story is about.
Yeah, I think that's a really good point too, is that it's sometimes, and even what you said, Nate, as well, is like sometimes it happens out of necessity or happens out of like there's the pain of going forward in the same way as it's more painful than it is to make a switch. And there's all like times where something happens and we rely on these systems, we rely on things, whether it's a car or it's having a place to live or it's some other thing happening. All of a sudden there's the shift to one of those things. Or I know I saw with physicians as well, with surgeons, they'd have all these different tools that they would use in a procedure, or all these different products. And if something they didn't have, it would like they'd have to shift everything, right? So to get a change in behavior would be very difficult. But I think it's very applicable to like for me, when I left my job, I had to say, you know what, in 3 years, I want to be not doing this. And I was able to do it, but I had to make it like, no, this is my brighter future. And I had to keep thinking about it, putting it in front of me. Otherwise, it wasn't going to happen. Yeah.
Yeah, absolutely. And it's almost like I don't want people to because everyone's going to hit crisis mode, right? I want people, I guess the point of your podcast and what we're doing over here is to help people see that they need to pivot before they're actually in crisis mode, because that can be very, very painful. And so the goal is to get everyone to be a professional and an investor at the same time so that, when they hit crisis mode, they have a backup.
Yeah, exactly. Exactly. Well, I know. So you've created a lot for yourself. You've done it through real estate. I'm a big fan of real estate. We do a lot in real estate and other private businesses as well. Can you talk a little bit about, I guess for a lot of people that are not like, they don't want to be running a rental property. They don't want to deal with tenants, or maybe they have had a rental home and it just feels like so much. A lot of people think, hey, I'm going to be financially free by owning houses, or a couple, and it just becomes another job. So how is it somebody scales up through real estate without actually having to do it themselves?
So that's a multi-layered question also, right? So there's so many different paths you can take with that. And so I say, so when I first started investing in real estate, I was doing it passively. So you can own real estate yourself and still be pretty passive in it and have a property manager manage it. And I think it really depends on your team, right? When you have the right teams, you're not taking those, they call it the four T's, right? You're not worrying about tenants, termites, toilets, and trash. Those are the four T's. But so you have a good team, you can be completely hands off and still own those properties directly, which is what I did originally, right? But then I say, for everyone, there's a different path in real estate. One size doesn't fit all. And so I like to group people into three buckets so that I feel like you have direction as you start, right? So there are the people who want to stay pretty passive. I call them the investor, right? Or the legacy builder. So they're willing to take time to build that, to scale in real estate and get to the point of financial freedom. These are typically people who and a lot of your investors are like this, Bronson. They want to be very passive. And so they invest passively as passive investors in syndications, right? Or in other people's deals where somebody else is doing all the work and they get to stay pretty hands off. And on average, I would say that's someone who is willing to give it time. They are willing to accept on average about 20% average annualized returns, right, in those projects. That's significantly higher than that 4% safe withdrawal rate we talked about in the stock market. But it takes time, and they still get to enjoy the benefits of the higher returns, lowering risk in their portfolio with diversification and all of those tax efficiencies, right? The second bucket, I say, is someone who is a short-term hustler. That's essentially what I did, right? This is someone who wants to get to the point of financial freedom within the next 5 years. And so they want higher returns, because at the end of the day, the time it takes you to get a financial freedom depends on your returns from the portfolio, right? And so you can do that in real estate. And then you know this, Bronson, because now you're stepping into private equity. And so, right. So there's so many different ways where you can really boost returns. And this is someone who is either doing rehabs or doing midterm rentals, using strategies where they're getting higher returns and still not going crazy. And eventually they can turn that portfolio into a passive long-term rental portfolio, have someone else manage it. But there's a period of time for which they are putting in more time into the portfolio to get higher returns, right? So you could be a short-term hustler. That's what I did. I went from owning those rentals passively and having a property manager manage it to starting to do short-term rentals and rehabs and forcing appreciation so I could get higher cash flow and build up equity really fast, right? So that's the second bucket. A lot of people love that because they say, okay, 5 years, and then I'm going to get to financial freedom. And then I get to work as much as I want to, travel. I get that time freedom, geographic freedom, legacy freedom. And the third bucket is an entrepreneur. And this is someone who is willing to put in more time into their portfolio to really start tapping into those tax efficiencies when suddenly now you're able to shelter $500,000 of your clinical income, which for physicians is really attractive because they are paying multiple six figures in taxes, right? So you're able to really tap into those advanced tax strategies where now your W-2 and 1099 income, you're able to shelter that from taxes because you're a real estate professional, you qualify as a real estate professional, or you're investing in short-term rentals, right? So I call them entrepreneurs because then it becomes almost like a business where, you really need to manage things. You need to be willing to take in some volatility here and there, have a different mindset. And so I call them entrepreneurs, but they get over 40% average annualized returns because now they're tapping into tax efficiencies and, it's run as a business. And so I say, pick whichever one you want to do. And you could be completely passive. You could do that by owning your own properties and having property managers manage it. You could do it by investing passively in syndications. Or you have a spectrum to pick from. And I think it's important for people to go in knowing where they want to be.
Yes.
And so
that's good.
I think it's really cool that you're having that conversation early because one of my really, really good friends, wanted that passive income, but he didn't have that conversation with enough investors to realize which one he wanted to choose. And so what did he do? Raised a bunch of capital, bought a bunch of rentals in Chicago. It's been a 10-year nightmare and he's finally getting out of it. He's finally selling them all. But the last thing he wanted to do was buy a whole bunch of rentals in a state he doesn't live in that were, you called them, I think, the 4 T's, right? He's been dealing with that for so long. And if he had that conversation early with investors and realized, had that conversation with himself, honestly, that he wanted completely passive income, I think he would have invested very, very differently. And so whether you decide to do the syndication route or buy your own rentals, it's important to have that conversation with yourself, with your spouse, to realize what you actually want out of this. And actually, something funny that happened to me this last weekend, I met someone completely out of the blue, don't even remember his name, but made over $750,000 last year and then sent 50% of it to the government. And I was explaining to him, there are these tax vehicles, obviously oil and gas is a big one, where you can shelter a lot of that income from the government. And so I think it's really, really, really cool that you have those conversations early and hopefully often so that people can figure out what's actually going to be important before they sink all of their cash into deals. And so actually, to turn it back over to you, Param, how do you have those conversations with people? What are maybe some stories that you've had where you've helped people figure out before they got into a situation they wouldn't be happy with, figure out how they want to pursue that financial freedom?
Yeah, I mean, I think what happens is that most people listen to my story and they're intrigued because, I talked about the crisis mode in my life. A year from then, I got to the point of financial freedom. I had six figures in cash flow because I started hustling, right? So I did short-term rentals. I used the tax strategies. I did rehabs. And everybody listens to that and they're like, I want to do this in a year. And that's when I bring in the conversation. And so we have the coaching program. I started off with a coaching program. I was like, this is what everyone should be doing. And then I realized that, there are those who, some of our full-time physicians will go in and buy 2 short-term rentals and shelter $800,000 of clinical income from taxes. They will self-manage and they love it. And there are those who can, this is why I specifically say you need to be an entrepreneur to do that, because it is like running your own business. It's not just real estate. It's also a business. And so there are those 85% of our community 85% of the people I work with want to invest passively, right? And so it's important for people to understand that spectrum and pick and choose early on. Even within the program, I'm constantly reminding them, because we're just starting our new cohort. And I'm like, guys, not everyone's meant to be a short-term rental investor. So make sure you have exit options if you're exploring it. I mean, it's okay to explore it. Make sure you have exit options. And I would say even 30% of people within the program end up investing with us passively. And so, yeah, again, important to have those conversations.
Well, it's so interesting, yeah, because a lot of people will say, I think it's the same. I think it's like above 90% of the people that invest passively, they like it. But there's some people that I know that have done it, and even with good results, they're like, I just don't like being. I want to be in the know. I want to be doing it. And there's also, it's like I used to think it was like these are passive investors and these are active investors. There's a lot of carry over to both. And so I've noticed like, even for us, like we're looking at doing like some land development stuff in LA after some of these fires, and it will be some single family, like it's something like totally out of our wheelhouse, but it makes sense to kind of get involved with this. So sometimes it can be kind of a mix of things. I'm a big who not how person, right? There's a book who not how of like, okay, instead of figuring how am I going to solve this problem, it's who can solve it for me. And I think this is like a big thing for high earners, is like getting your time back, or that book, Buy Back Your Time, right? Is there a way that, do you have to actually be the one doing it? Now, as a physician, you do, right? Because you can't really pass off patient information and do certain things you can pass off. A lot of things you can't. You can't pass off seeing the patient or doing the specific work of a physician. But I guess what's something that you see like people have a hard time with when they're working on it? Because you work with a lot of professionals and physicians and things that are like trying to go from here to there. Like you said, it's, do I want to be an entrepreneur or do I want to be passive? But what are some of the things that just kind of from a mindset standpoint, Tony Robbins says about 80% of success in life is just getting your psychology right. So what's something from a psychology or mindset standpoint that someone has to get right if they're going to transition?
To a passive investor?
They're going to yeah, I gotta say transition.
To investing
to like genders, or no, I'm kidding. Transition to make it real controversial. Transition to like to become a passive investor, or even to become like, I want to leave my job. I want to transition to a different role.
Okay. Yeah, I love that. No, you're absolutely right. Right. So yeah, like you said, most often people get overwhelmed at how am I going to do this? But the most important thing for them to realize is like, do I really even need to do it? Right. So I think the why is the most important thing. And so I that's what I focus on initially. Right. So why do you need to do this? Why is it so important? Because when people think, okay, I want to retire sooner, it's because, okay, do I want security? Am I looking for more freedom, right? And for some people, it's security. Some people, it's freedom. Some people, it's impact, right? So I always ask them first, like, what is it that's so important to you? And keep that in focus, because that's what's going to help you make the transition. I think the other thing is to come to this realization that working harder is not going to get you to that point sooner. And so the question is working smarter, right? Yeah. And so initially I expose people to the concept of asset allocation. It's going to be it determines 90% of how soon you get to financial freedom is asset allocation. And most people don't realize that, and they are stuck in the stock bond loop because that's all we're exposed to, right? That's what most financial advisors talk about. So the shift from working harder is going to get me to financial freedom to working smarter. And a big part about working smarter is, really figuring out what your asset allocation needs to be, because I would say most of the ultra high net worth individuals have less than 50% of their investments in stocks and bonds, and they have a significant allocation into alternative investments. And most professionals don't even think about it that way. So the shift from, okay, let's work smarter, and that has to do with asset allocation, is one of the biggest shifts. I think I hope that answers your question. But then there are all the other limiting beliefs that come into play once they think about, okay, I want to shift asset allocation, which is like, is that going to take up too much time? Is it going to require a lot of capital? And is it risky? And that's the next set of questions. But I think the biggest shift is going to be the shift from working harder, like taking more call, working weekends, taking on that second job, to a few pivotal shifts in asset allocation. Because I actually ran the numbers, I built my own retirement calculator. And, if you save twice as much, which is the goal for most people, if I save more, if I live more frugally, I make more money. If you save twice as much, you can probably take, for the same portfolio, right? If it takes you 25 years to get to financial freedom, you can bring it down to 20. But if you just shift asset allocation, you have something with, a higher ROI in there that also lowers your risk. You can take down that time to like half of what would it take you to get to financial freedom with a traditional stock bond portfolio. So I think that is the biggest shift.
So good. And financial freedom doesn't have to take as long as you might think. Brian Lubin, one of my all-time favorite authors, wrote a book called From Passive to Passionate. Talks about the three-tier framework, right? There's surviving, this is for people who do want to replace their income with passive income. There's your surviving number, your arriving number, and then your thriving number, right? So for a lot of people, their surviving number is just looking at the bank statements, the credit card records to figure out how much income do I need coming in to cover my basic expenses, right? That's the first number. The second number is the arriving number, right? What's going to completely replace my doctor's salary? And then the thriving number is what do I actually need coming in every single month to live the life that I actually want to live? And what people usually find in laying out those three numbers is that stocks probably aren't going to get you there, right? And that's something that I've learned 100 times over when you talk with the truly ultra wealthy. Even though they do own stocks, that's not where their passive income's coming from. Because if you're owning the Dow or whatever stock, even Tesla stock, right? Tesla, good time to buy Tesla right now. But most likely, right, your Tesla stocks aren't going to replace your income. It's not going to give you time freedom the way that a multifamily apartment building might, or an oil and gas might, because it's not generating constant cash flow. And that's one of the ideological shifts I've had over the last few years, is realizing, 10% profit or 20% profit, not all assets, not all stocks, not all investments that yield a 20% annual return are the same, right? The difference is going to be in what does that actually do for you. So some assets that might not have as high a return, but have a higher initial cash flow or return of capital a lot sooner, will give you freedom a lot quicker than assets that look good on paper. And so actually, to turn it back to you, Param, what are some of your favorite assets from a cash flow perspective, from a return of cash flows perspective that you're helping your investors invest in?
Yeah, that's such a great point that you made, Nate. And just to go back to that, the surviving income, when I was even looking at surviving income, it would have taken me 17 years with a stock bond portfolio. It took me a year with real estate doing it the way I did, right? So that's the shift over there. The asset classes, in terms of cash flow, I mean, that we like, and so our investors who buy direct ownership, they do short-term rentals, mid-term rentals, long-term rentals. But so far, we've done a lot of stabilized value-add multifamily, and from a risk perspective, if we're introducing that to the community, we're doing due diligence. That's where I see we bring a lot of value. And so it's been a lot of value add multifamily, and we go in with cash flow that's at least 5 to 7% day one. So we know that that gives us a buffer and that reduces risk across our portfolio. We've also been exploring self-storage and mobile home parks as our next asset class to venture into, and then potentially adding on a debt fund in the current interest rate environment, just to give people options. Again, when I think about tax efficiencies, that's something we needed to have conversations about, but it's still something that we'd like to include. We're also looking at private equity. I know, Bronson, you're venturing into that, and that's definitely something we're doing due diligence on. I think those are all great opportunities for people looking at alternative investment options with higher cash flow. But yeah.
Hey, Param, I just want to say it's so great to talk to you because you've really done it. You've really achieved something very few people have. I mean, there's a lot of physicians that I worked with for 10 years that would say, oh my gosh, I'd love to have enough money coming in so I don't have to go to work. And I know some people that most people I know don't really enjoy what they do. If they had the choice, they'd rather not work, right? And it's great when you can work from a place of meaning and purpose. And I know what you do it because you can help make a difference and show other physicians the way. And you basically, you have a conference that you're doing in LA coming up, which I'm excited for. You have all kinds of things that you're doing, that you're creating value of students. And so I just want to really celebrate that you're really somebody who's not only done it, but you're also giving back to the community, because it takes someone that has not only, like, if you talked about it, but you hadn't done it, it wouldn't really give you the authority, but now you've done it. And now you're choosing, even though you didn't have to, that you've made this your purpose to really help people, which I just really want to honor. As we're kind of wrapping up here, how can people get in touch with you, follow what you're doing, hear about your conference, your coaching program, the investments that you do?
Yeah, I think a big part of what we do is educate. So I'd like to share maybe a few free resources for anyone who is thinking about investing passively. We have a guide which helps passive investors kind of build their buy box and do their own due diligence. So that's gwcapital.com/guide in lowercase. And then if you go on to Generational Wealth MD, there's a free ebook where I actually go over how I was able to really compress those timelines to financial freedom with actual numbers and case studies. So that's a great resource for people thinking, sounds too good good to be true. And so I actually put it down on paper. So that's another resource. But the summit you talked about, Bronson, is in LA. It's in October. And it's a place where, again, I think there are great connections that happen when you meet people in person. And so that's why we're super excited about the summit. If anyone's interested in joining us, it's generationalwealthmd.com/summit in lowercase.
Awesome, Param. Thanks so much for being here. Look forward to connecting with you soon.
Absolutely. Thank you, guys.
Well, Nate, I really enjoyed that interview, man. Wasn't that good?
It was amazing. I loved it.
Yeah, I think the thing that for me, I always love talking to people that have done it because it's not like it's theory. It's like this, Param has done it. She's been in the arena. It says it's not the critic that counts, it's the one who's actually in the arena, who's actually done it. And so, and of course, there's challenges, there's frustrations, things, we've gone through. We've had deals that have gone amazing. We've lost money on deals. Like we've had all different things happen. But when someone can share that and they have a passion for sharing that information, it can be really valuable. And that's where like a lot of mentors that I've had are people like Param that are not paid mentors. They're just people I learn from and I get at some sort of nugget and a takeaway. So for me, it was just, really it's not one big step to get there. It's just a bunch of little steps, and it's continuing to keep that goal in front of you and then taking steps toward it every day or every week.
Absolutely. And my two big takeaways from what Param was sharing is, first of all, number one, be willing to pivot, right? We all have an idea of where we want to head in our lives, and the willingness to pivot will take you much further than your original strategy, which I thought was really helpful.
Yeah.
But also a big part of what she shared indirectly was the willingness to just get started and take baby steps with passive income. You don't have to immediately quit your job, right? You can start building up passive income slowly but surely. And then once you get to a spot where you feel very, very confident, if you do need to pivot, and in her case, leave her MD job for a passive income, investing, coaching courses, that thing you can. But it is a lot less scary to pivot when you have taken those baby steps. You've built up 1, 2, 3 different small forms of passive income. Your tolerance for that goes way up. And that's something I'm really thankful for with my father, is he had us investing in passive income at like age 14 or 15. And so even though I was only investing $1,000 here, a couple thousand here, that money didn't do that much for me, but it gave me the confidence I needed to where once I was earning the big bucks, I felt confident investing when a lot of my friends weren't confident in that.
Yeah, no, it really is true. I think one thing that I heard from Param as well is this idea of hustle. And I'm not a big like hustle. There's like a hustle culture that's out there. It's like, oh, you got to hustle and you got to, get rich or die trying kind of like just whatever it takes. And it's like, I don't know. I don't really agree with that because the whole point of passive income is not to hustle. But sometimes there is a time where you can have your main thing and you have a side hustle, realizing it could be for a season and then you transition. And for me, that's what I did. It took probably 2-3 years of doing, working 60 hours a week. And then I was able to kind of stop doing one and be able to kind of actually have a life of, I actually built something here, which is great. So, awesome. Well, I really appreciate you being here, Nate. Appreciate our audience as well. Hopefully you got a lot out of this interview with Param, and again, we encourage you to connect with us on socials. If you haven't joined our investment club, we've got some amazing deals coming up in oil and gas, business, real estate, different sorts of things to provide cash flow, appreciation, and tax benefits. And also, I want to give a push for Nate's book called The 18 Laws of Leverage on the back shelf there. There it is. Now it's in front by Nate Hambrick. I've gifted this book to several people. They've all said it's an amazing book. I highly recommend it. It's actually blowing up right now on Amazon. So I don't even know if you guys may run out of copies shortly. They're just kind of like coming off like hotcakes. But Nate, anything else you want to share before we wrap up here?
Not a ton. Just if you don't have a ton of passive income, obviously invest with Bronson or people like Bronson. Passive income changed my life, and it can change yours too.
And I paid Nate to say that, so that's good.
Yeah.
That's awesome. Well, hey guys, appreciate you. Thanks for being here. Thanks for joining the Mailbox Money Show. We'll look forward to seeing you guys on the next episode. And thank you for taking the time to educate yourself, because when you do it, it inspires me. We can inspire each other for what we're doing. So thanks for taking today and making it count.
Thanks for having me.
You've been listening to the Mailbox Money Podcast. For more free resources, articles, and videos, go to bronsonequity.com. There you can download your copy of the special report, The Single Best Investment Strategy During and After a Pandemic. None of the information shared here is an offer to buy a specific investment, and this is for educational purposes only. Consult your financial, legal, and tax professionals and use your own common sense before making any investment decisions. Thanks for joining us, and be sure to tune in next time for more Mailbox Money.